Forex traders, you see, I have just stumbled on some very, very crazy numbers. Crazy numbers that state that, guys, only 5% of Forex traders are successful. That's absolutely wild, meaning that the remaining 95% of traders are still struggling. So you know what I decided to do? I'm like, this is crazy. This cannot continue to happen. So I decided to look into the back end of some reputable brokerage firms because now we want to know the people who are winning, what are they doing differently? So I decided to study them to understand what do these traders have in common. And ladies and gentlemen, do you know what I discovered? I discovered something very, very simple and straightforward. They have a hyper profitable trading strategy that enables them consistently extract money from the markets. So forget about what your mentor has said. Forget about what the signal groups are telling you. Forget about the indicators. Forget about all of that. So people say it's your mind. Get your mind right. Rubbish. It all boils down to what? A hyper profitable trading strategy. And ladies and gentlemen, that's exactly why I've put together this video, because I want us to sit down today. Me and you would sit down today and I would help you build a profitable trading system that can consistently help you extract money from the market. Ladies and gentlemen, if you're just joining me for the first time, my name is Dapo Willis and it's a pleasure to be with you guys. I've been trading the market for about 14 years now, and just last year alone, I went on to make $95 million. And in this video, like I stated earlier, we are building a hyper profitable strategy that can enable you guys make consistent, like we want to be part of the 5%, to consistently extract money from the markets. All right, guys, enough of all of that. Oh, before I jump into the video, ensure to smash the subscribe button there. Why not? Because think about it, like you want to be part of this profitable community. You know what I'm saying? Smash it right there. You got nothing to lose, man. All right, let's jump into the video. Let's see what we got. You see, I have my paper and my pen. That's how you know I'm a very serious guy. Like today, you must become profitable. We will turn you into a profitable trading guy or lady, whatever it is you call yourself. You will use the market to make money, to feed your family and buy that Lamborghini. You better, okay? Don't waste my time. Anyways, guys, let's jump into this. So now, what are the fundamentals when it comes to building a profitable strategy? Those guys who are constantly extracting money from the market, what are they doing differently and how can we adopt that today? You see, when it comes to building a profitable trading system, there are several components that go into it, and I'm going to break it down. The very first one is what they call market analysis. A lot of traders are so hyper focused on, oh, give me a strategy that tells me when to buy and when to sell. That's why a lot of traders consistently fall victim to those indicators that tell them on their charts buy and sell. I can tell you after trading for 14 years that those things don't work. What works is, first things first, you need direction. So number one, market analysis, okay? What exactly is market analysis? Market analysis is very different from trade execution. Market analysis is your ability to go on higher time frames and identify clear directions. Now, how exactly do you do this? I'm going to quickly run this over as to how I do it, and hopefully you can obviously pick some pieces of information together, and I pray it sticks in your brain because you really need this shit to stick in your brain. Anyways, how do you conduct a very thorough market analysis? Number one, you go on a monthly time frame. The monthly time frame is like Google Maps. I keep preaching this shit. It's like Google Maps. You want to go on a monthly time frame because the monthly tells you what the overall flow of the market. Without the monthly time frame, you will be buying into resistance and selling into support. Without the monthly time frame, everybody is selling, but you will be buying. You do not want that. So go to the monthly time frame. Okay, the M guy, people hate the time frame, by the way, but that's fine. It's okay. I mean, most people don't like it. That's why 95% of them don't make money anyways. But the people who make money, who's part of the 5%, they love the monthly time frame. Why? Because think about it. Why are you driving without Google Maps? Why are you trading without checking the direction of the monthly? Anyways, that's it. Now, once you're done with the monthly, you want to come down to the weekly. The weekly is where you come and plot those key levels. You see, when people talk about demand and supply and reversal zones, they're talking nonsense. They don't even know how to put it. It's on the weekly time frame you come to put these levels. And then once you're done with that, right? Because think about it. If a level can hold on the weekly time frame, that's a level. That's a big boy that you want to pay attention to. And then once you're done with the weekly, you then come on the daily time frame. Now people are like, "Ooh, what happens on the daily time frame?" I'll tell you what happens on the damn daily time frame. The daily time frame is the tradable trend. What does this mean? Oh, he's come again. Let me explain it to you. You see, the monthly candles are massive. No, but that's why it's called market analysis. It's too big. Can't trade it. I get it. Ain't nobody asking you to trade on the damn monthly time frame. But the monthly time frame, once a trend has formed there, it's clear, right? Think about it. For every monthly time frame, there are 30 daily candles. So you see them big chunks on the monthly that go like this. It prints a lot of daily candles. Now, the idea on the daily time frame is simple and straightforward. You want your daily trend to be in line with the monthly time frame. What does that mean? It means that the daily, which is the tradable trend, which you can zoom in to look at, which makes sense to you, you want it to be flowing at the same pace, in the same direction as the big boss. Because why not? The big boss in this game is the monthly time frame, and it dictates the pace. So I hope we've been able to cover what market analysis is all about. First of all, market analysis is where we come to look out for what direction and plot those key levels. This will guide us into when we want to start buying and selling. You're probably wondering, oh, this shit is getting complicated, it's crazy. It is simple and it is straightforward. Don't worry, ladies and gentlemen. I have also put together a fantastic program called the Forex Mastery Program that teaches all this stuff in detail. Unfortunately, I cannot share all the information, but I'll do my best because at the end of the day, I love you guys and I gave you guys a promise that we were going to help you build a profitable trading strategy. But if indeed you want to get the Forex Mastery Program that has all of this included in it, click the link down below and get yourself the Forex Mastery Program. It's just $99. I talk about everything there, entries, exit, everything you can think about. But that's not why we're here. We're here to build you a profitable trading strategy. All right, guys, now let's go over to the second aspect of things. We've spoken about market analysis. Now we want to get into trade execution. This is the interesting part. This is when everybody gets fired up. Everybody's eyes get lit up. Why? Because they want to buy, they want to sell, they want to make the money. Not a problem. Now, what did we speak about at the beginning of the video? Market analysis, right? We have how many time frames in market analysis? Monthly, weekly, daily. 3 time frames for analysis. Once you're done with that, trade execution. Your trade execution should be done anywhere between the 4-hour and the 1-hour time frame. People are like, but I want to trade on the 15-minute, blah, blah, blah. Relax. You can still get to do that. However, you ideally want your setups to form between the 4-hour and the 1-hour time frame. Whatever time frame you decide to execute on is absolutely fine. Now, what kind of setups should you be looking out for? Don't forget, guys, we're building a profitable trading strategy here. So, we're going to pick from different hyper profitable methods that have worked before in the past, and we're going to put it together so that obviously you guys can have something that you can work with, right? So over the years, what kinds of setups have worked very profitably, and which kind of setups will continuously work over the years? You see, from how we just did our market analysis, it's clear as day that we are leaning towards the trend style of trading. Like, we are trend traders. Because why? The trend is your friend. It is easier for you to trade the trend. Now, if you're going to be trading the trend, it makes your execution a lot easier. I'll break down a couple of entry patterns that I feel like you guys can adopt that will make you guys a lot of money. The first one is what they call the counter trend line break. Now, a counter trend line break is very simple and straightforward. It is when the market is in a trend, is clearly heading to a particular direction. It pulls back for a period of consolidation, ideally on a 4-hour or on a 1-hour time frame. Let me take that again. You see that daily time frame we spoke about is heading down, for example, right? And for some strange reason, it starts to pull back. There's profit taking, right? When the market takes profit and is pulling back, as the market is about to start heading down again, you want to scale to a 4-hour time frame and you want to draw an adjacent opposite line to the retracement. Meaning it's called a counter trend line. Ladies and gentlemen, work with me, please. Okay, I'll put some diagrams here so you guys can see what I'm talking about. Yes, the idea is for you to plot a counter trend line against the trend that is pulling back, meaning that as the market wants to start dropping again, it must break that counter trend line before it starts to fall again. Think about it. A trend line is like this. A counter trend line is the opposite of a damn trend line. People, work with me here, please. Work with me, people. Once again, guys, if you're enjoying this video, don't forget to smash the subscribe button. Don't forget to drop a fantastic comment. And don't forget to grab yourself a copy of the Forex Mastery Program. Everything that's in my brain is in that course. You would absolutely love it. The link is in the description as always. So a fantastic way is a counter trend line break. I love it. I've used it over the years. Brilliant and methodology. And it's amazing. Trend, push down, pull back. As it's about to start going again, just wait for 4-hour candle close of a counter trend line or a 1-hour candle close of that counter trend line, and you're in business. The chances of this trade playing out for you is what? 9 out of 10. Trust me. Provided that the higher time frame has pushed the market in a particular direction and is just coming back up for water, best believe it's going back down under. And you want to, most people want to jump on the trend when it's too early. No. This strategy saves you from premature entry, because also the counter trend line saves you from fake outs, like fake outs. So if you drop the counter trend line, you see fake outs come back with it. So you want to wait for a 4-hour or 1-hour candle close. Preferably, I like a 4-hour candle close, but you can obviously dive down lower to a 1-hour candle close, and that can absolutely help you. So that's one method for you guys to obviously enter your trades, which is called the counter trend line methodology. Now, the next one that I also like to use is called the Fibonacci bounce. Brilliant Fibonacci bounce. Fibonacci is one of the best ways to get into the market. I love it so much. Why? Because every move and pullback is most likely into a Fibonacci zone. What does this mean? Fibonacci is just simply a ruler that measures from one swing to another swing. So let's put this into context with our daily trend that is flowing down. Let's say the daily has dropped, okay? And it starts to retrace. If you take your Fibonacci from where the drop started from to the bottom of the drop where the retracement started from, what does this mean? This is going down. The drop starts from here, it stops here to retrace here, right? All you need to do is take your Fibonacci from swing high to swing low. As the market pulls in between the 50 and 61.8, don't sell inside the Fibonacci zone, please. You want to wait for what? A push out. The market comes in, wait for a what? A freaking push out. And this is exactly where candlestick patterns come into play. Now, most people are like, you see, one thing I notice is most people take courses when it comes to Forex trading. They read baby pips, and they learn all of these little things. The problem, the challenge usually is putting all these things together. You're not supposed to trade candlestick patterns on its own. Candlestick patterns are there to complement an already existing action. Work with me. You see how the market has pulled into your Fibonacci zone, your 50 and 61.8. By the way, any other Fibonacci zone is rubbish. 50 and 61.8. Once the market pulls back into that region, wait for a bearish engulfing candle. In this case, the market is bearish. So daily, start from here, drops, pulls back. You take your Fibonacci from high to low. Your 50 and 61 should line up somewhere in the middle. Fibonacci is nothing but a measurement tool. It just calculates, the length of the freaking wave and just says, okay, 50% means it has retraced 50% of its move. Simple. Not rocket science, right? Now, ideally, most trends that want to continue would retrace 50%. Anything above 50% or 61.8 is going for a trend reversal. But if the 50 and 61.8 can hold that market very well, you're in business. So once the market pulls into the 50 and 61.8, wait for a bearish engulfing candle. Ladies and gentlemen, bearish engulfing candles are absolutely amazing. How does this look like? Bearish engulfing candles are very simple. You see one bullish, two bullish, three bullish, and you see one bad red boy, bam, just drops away from that zone. You want to sell. You want to make sure that the market, so the idea is, listen guys, the idea is very simple, it's amazing, lovely. You want the market to go down and you want it to come for rest. Usually comes into rest in the Fibonacci zone. And the Fibonacci zone caps it. Once the Fibonacci zone caps it, and the market now starts jumping down again because you've seen the candlestick pattern, because you're a brilliant trader and you've read the damn books and you know what I'm talking about. Once the Fibonacci has capped the market and the market wants to start dropping down again, you want to place your sell trades. Now, where do your stop losses go? Simple and straightforward, above the Fibonacci zone. And where do your take profit go? You see that bottom place, the support level where the market turned around because it wanted to start retracing. Let me take it again. This is the daily drop. We stopped here and retraced, and we started coming down again. Your first level target is always at the bottom. And if the market breaks the bottom of that initial swing, you just trail your stops. It's as simple as that. Trailing stop simply means as the market continues to drop, the broker will automatically adjust your stop loss and keep reducing it and locking in. Trading stops is a way to pretty much lock in profit. Ladies and gentlemen, I hope I've been able to shed light on this topic to the best of my ability. I've given you, as far as I'm concerned, one of the most realistic and amazing ways to go about your trading. We've spoken about market analysis, which is very important. See, once you can adopt this market analysis approach, it's called the top-down analysis, right? Once you have a clear idea of how the top-down analysis works, these trade execution methods are very simple and straightforward. Two of them I've just told you about. The Fibonacci pullback, brilliant, or the counter trend line plot breakout. Simple and straightforward. Once again, ladies and gentlemen, if you want to learn more about how I trade the market, I speak more about this methodology with more strategies, with more refined entries, lower time frame, higher time frame. Everything is taught on what the Forex Mastery Program. Do yourself a favor, ladies and gentlemen. Click the link down below. Get yourself the Forex Mastery Program, and I'll catch you guys in there. Once again, ladies and gentlemen, my name is Dapo Willis. I know you wanted this video to be a bit longer. Maybe I'm going to do a part 2. I'm not really sure yet. But guys, these are the fundamentals when it comes to what building a profitable trading strategy. 2 elements are so important: market analysis, market execution. It is as simple as possible, and ideally your risk to reward should be an average of 3 to 1. That's my time, ladies and gentlemen. I love you very much. Take it easy and peace out. Bye guys. Bye.